Well, China's key economic conference disappoints investors. Beijing signals more borrowing and spending, but leaves out policy details. French President Macron is also set to name a new prime minister in the coming hours as he seeks to avoid another government collapse. Plus, Britain's economy unexpectedly shrinks for a second straight month in October, extending a disappointing run of growth figures under the new government. So we have a lot of news today. Actually caps off a very, very busy week. So let's take a look at some of the European markets. Now, the map is showing us a little bit of green across the screen. We did see quite a lot of volatility this week. I would suggest all focus, of course, is on the Fed and the path forward. We have that Fed decision next week. We look at ECB, what it means for also some of the future of the curve. So the FTSE gaining 0.1%, DAX 0.3% higher. The biggest gainer for the moment is the IBEX. A couple of things we need to watch out for is everything to do with technology stocks. The other thing we watch out for is, of course, crypto. Now, this is the picture for S&P futures gaining some 0.2%. The pound also weakening a little bit after Britain's economy unexpectedly contracted for a second straight month in October. And then when you look at oil and gold heading for weekly gains, euro dollar 104.69. Broadcom shares also rallying in the U.S. pre-market after predicting a boom in demand for its artificial intelligence chips. That will probably give a little lift to technology stocks. Also in Europe, the company, a chip supplier for Apple, says sales of AI products will gain 65% in the first fiscal quarter, 13.9% higher pre-market. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, China top leaders have set domestic consumption as their top economic priority for next year, trying to bolster confidence against the threat of looming U.S. tariff increases. Now, to talk about all of this, Daniele Antonucci, Chief Investment Officer at Quintet Private Bank, and Beata Manthey, Citi's head of European equity strategy. So thank you both for joining us. I mean, it was a big week for China. Were they not? What kind of policy were we going to expect? I mean, now they want to boost consumption, but we don't really have more levers than the market was expecting. Are we going to see disappointment, Antonio?
That's right. I think so. I think the overall sense is that there is a degree of stimulus, there is a commitment to do more for the domestic economy, but by and large, we are lacking detail. Obviously, China added some spark to global markets a month or so ago, but at the same time, we haven't seen the strong stimulus of the fiscal type that would boost the real economy. We have no active positions on China at the moment. We have a long-term exposure to emerging markets across equities and also fixed income, but we are refraining from adding to China just yet.
Beata, are we a little bit in a wait-and-see mood, also given what Trump was saying about inviting Xi to the inauguration? I wasn't sure what that meant economically.
Nobody is sure about that yet, right? But I think everything we are hearing is a step in the right direction. We just need to hear a bit more details, right? So the news flow has been underwhelming. We didn't see, the market wants numbers. We didn't get the numbers. The view of our economists is that we could get the stimulus next year, the consumer-driven stimulus of 2.4 trillion yuan. Nothing has been mentioned so far about that, but this is our house view. So it's going to be gradual, more is coming, and then I think it's one of the pieces of the puzzle that kind of underpins a bit better story for European equities that we've seen this year.
Daniele, what are you expecting actually from the Fed next week? I mean, a lot of the focus has been on inflation numbers and some of the other underlying figures that the Fed looks at.
So I think next week is easier. So we expect the Fed to cut rates.
Easier said than done, Daniele.
That's right. It is.
That always makes me nervous.
But the real question, I don't think, is next week as such. I think it's more further down the line. There's a strong market consensus that the red sweep that we got, the forthcoming fiscal stimulus, is likely to be positive for U.S. growth, and the tariffs negative for the rest of the world. But it's a lesser focus on whether these policies could be inflationary and longer time horizons. Actually, I think there's the risk that not next week, but early next year, the Fed will slow the pace of rate cuts They might pause for longer than the markets think. And I also believe that there is a reason why the dollar is strong. We expect more rate cuts the side of the Atlantic with the ECB, potentially bigger rate cuts if the tariffs take a toll in Europe. So the Fed, I believe, another rate reduction, but on the hawkish side going into the new year.
Beata, and this was some of the things that we were, also suggesting, is that actually if you look at the expectations for a lot of the central banks, including ECB, they're not really touching tariffs at the moment because they don't know what they'll be like.
Absolutely. We really don't know what we are playing against, but the feel and our model suggests is that the market has started to play it full on, thinking that the blanket tariffs would happen, right? Our analysis that we've done with analysts across all different sectors suggests that the impact from the tariffs could be around 1 to 2 percentages of the EPS for next year, right? It's something, but it's not an absolute disaster. So with that in mind, we have below consensus EPS growth for next year. Instead of 8% that the analysts expect, we think we are going to continue to see some more downgrades coming through. We have 5%. That's conservative. And what I get for that EPS growth, with the assumption of only 5% re-rating to long-term averages, I get almost 10% upside for Stock 600. Some people say it's bullish, but it's really important to know where we are coming from, right, when you start thinking where we are going to.
Yeah, it's bullish, but also you have to take it as a whole. So we also heard from Christine Lagarde on this growth, momentum in Europe that will be quite tough. Here she is.
The latest information suggests it is losing momentum. Surveys indicate that manufacturing is still contracting and growth in services is slowing. Firms are holding back their investment spending in the face of weak demand and a highly uncertain outlook. Exports are also weak, with some European industries finding it challenging to remain competitive.
This goes back to, how do you fix competitiveness in Europe, and how does that also translate into what stock picks you like?
Absolutely. So competitiveness issue is a long-term structural story, and we could talk about it for the entire program, right? But what Lagarde said tells us that they are really focused now on the slowdown in growth. That's important. That's a very different setup to what Daniele has mentioned about the US, when the Fed could do less because the economy is so strong for now, right? Now, in Europe, we don't have that problem. So the ECB is going to cut, according to City economists, at every single meeting until all the way till September. A few months ago, we thought it would only happen at every single quarter. And again, not a game changer, but this is one of the issues that could underpin equity markets into the next year. But of course, competitiveness and news flow from policymakers, I'll be really focused on what the new German government will have to say about that. Really to be watching out for.
Yeah, and we'll talk a bit more about politics. We're also waiting for this French Prime Minister announcement possibly coming soon. But then, I guess the bigger concern is also what happens to the dollar, and therefore what happens to other currencies, including the euro.
So here we have a near-term horizon. Like we said before, it's a strong dollar. You have a growth differential that's in favor of the US. Yeah. There's a degree of uncertainty when it comes to China. We talked about it before. The Eurozone as well. So we have a strong dollar. Yeah. Then in longer horizons, these very policies, it's not clear that they support the greenback. Of course, a wider fiscal deficit will need to see how wide it's going to be. At these longer horizons, I would expect potentially some risks that the dollar gives back some of the gains we are seeing now and we are continuing to see for some time.
So what does it mean for your appetite for European assets?
So generally speaking, we reduced our exposure to European assets. We reduced our exposure, for example, to European equities. Yes, rate cuts, like in other markets, could be supportive, but I think they are, by and large, in the price. I don't see the catalyst when it comes to a pickup in the fundamentals. And with the situation in France, also in Germany, with the election ahead, I don't think there's a good chance to see a resolution, or at least the beginning of the resolution of these structural problems that have been there for such a long time.
Okay, thank you both. Daniele Antonucci from Quintet Private Bank, Beata Manthey from Citi, both stay with us. Now, coming up, who will be Emmanuel Macron's new prime minister? We take a look at his options to avoid another government collapse. That's next, and this is Bloomberg. Welcome back, everyone. Now, the French president, Emmanuel Macron, is widely expected to announce a new prime minister in the coming hours. Now, Macron is aiming to forge a coalition that will last until 2027, until his term ends, and avoid another government collapse at the hands of a divided parliament. So let's get more from Bloomberg's Anya Nussbaum in Paris. Anya, so you've been following this from the very beginning. There's a lot at stake, but how difficult is it to find the right person at this juncture in time?
Morning, Francine. It's extremely difficult for Macron to find the right person because the next prime minister, whoever it is, will be facing the daunting task of finding a coalition in a deeply divided National Assembly that has been divided in 3 blocks since Macron called snap elections this summer. So right now, Macron is meeting with a long-time centrist ally. His name is François Bayrou. You can see him on this infographics. He has been working with him for years, and he's a man who both has shown some respect for Marine Le Pen and also willingness to find compromises. He will have the mandate, if he's picked by Macron, to build a coalition both with, probably with the socialists and with the right, which means granting huge concessions to both camps.
Yes, so the problem, of course, Anya, is that, we need to look at how the far-right rival, the leader, Marine Le Pen, is likely to react. But you now have a parliament that's split 3 ways. So finding, again, a candidate that can speak to all 3 is extremely challenging and difficult.
It seems almost impossible, actually. It's true that the previous Prime Minister, Michel Barnier, has tried to work with Marine Le Pen. He granted her key and expensive concessions on the 2025 budget. And yet she blew it. She decided to oust him to join a coalition that toppled him last week. So Macron is now facing the reality of not being able to work with the far right and having to work with other political parties, especially trying to rope in the most moderates of each party, including socialists, Greens, and the traditional conservatives. But these people hold very, very diverging views on anything and everything, from taxation to business to social justice. So it's going to be really difficult to work with everybody.
Thank you so much, Anya Nussbaum there in Paris. Of course, our political reporter who follows this very closely. I know she'll be up to date as soon as the name breaks, and we'll bring her on for expert analysis. Now, let's return to Daniele Antonucci from Quintet Private Bank and Citi's Beata Manthey. So thank you both for staying with us. Beata, I mean, look, whoever takes over from the outgoing prime minister has a very big job. I mean, it's extremely difficult hurdles because of this fragmented parliament. What does it mean for French stocks and French assets?
Absolutely. So our view is that whoever is appointed is not going to be able to have a functioning government as such. So this political uncertainty that we've been seeing since June is going to continue. There is no change. Now, when it comes to CAC 40 and French equities, these have been the biggest underperformers year to date within the European space. Everything has started with political uncertainty, but then I would argue that a big influence on these huge downgrades that French EPS has seen has been due to the weakness in China, right? CAC 40 is such an international index. It has more exposure to the US than it has to domestic French. So the market has been very worried about all the uncertainties. Of course, tax hikes in the previous budget were not helpful, but we argue it's mostly in the price now. And looking forward into the next year, a lot has been in the price. Uncertainty continues. It's priced in. So I think investors should start looking on the dollar international side of things. Perhaps luxury goods are not as exposed to tariffs. They would pass the costs through. So bottom line is, very recently, 2-3 weeks ago, we've actually, from being much more cautious on France, the moment French election has happened, we've moved it in our European country portfolio all the way to overweight because of these reasons.
Interesting. And Daniele, how do you look at, I mean, you actually like some European bonds, right?
I do.
Is France one of them?
Not quite, no. But I would say, just like in equities, obviously spreads have widened quite a bit, so the same rationale could apply. Valuations are more attractive right now. But generally, I don't think I would look at France as a top pick going into 25. Generally speaking, I would like to buy, and I have bought, short-dated government bonds. Yield curves are flat, so there's no reason to move along the curve. We have an overweight on European investment-grade bonds, but even that, spreads are tight. We have reduced that, and we have reallocated to these government bonds. Generally speaking, I don't think I would want to reduce our exposure to European equities, of which France is such a big part, to underweight, but I wouldn't add at the same time. We're neutral at the moment.
What do you do with Germany? Again, big election in February, many implications for the rest of Europe.
It's a rather similar rationale, and I think that uncertainty that we have seen hasn't played out fully. So another thing that we did, our investment philosophy combines growth but also wealth preservation. We bought an instrument that appreciates when European equities go down. You should think like an insurance. It's just in case. The best scenario is that you don't have to use it, but if that happens, if there is additional downside risks, the market's price in European equities, that position will benefit and will protect portfolios.
I mean, there hasn't been great news out there in general. I have to say, I was looking also at GDP in the UK, worse than expected. We're seeing a contraction, and so again, that puts a lot of questions about the Labour plan.
Absolutely. So overall, broad-based Europe, the news flow has been quite depressing over quite some time. But our argument is that this news flow has been already priced in, and you could expect some actions, some catalysts coming through that could reverse it, not a super positive outlook, but you will be able to see positive deltas. And from this level of bearishness for European markets, where everybody is bearish, it's very interesting what Daniele mentioned, that they are no longer underweight, they are neutral. That's the first step. There are many investors that are still underweight, and they are realizing that they are risks to the upside that could put their portfolios at risk. So that's the first step of capitulation of bearishness, closing these underweights, moving to neutral. But for investors to really start thinking, do I actively buy Europe? You need to see more positive news flow, certain types of catalysts. We also talk about ceasefire in Ukraine as underpinning cheaper energy prices for very energy-intensive industrial base in Europe. I could talk for a very long time about possible catalysts that most likely will happen at the same time, or more or less at the same time, making the entire puzzle together. Not big bazookas, but the bearishness now is good, right? Yeah. That's the foundation for the catalyst to start working.
Thank you both for joining us. That was, of course, Beata Manthey from Citi and Daniele Antonucci from Quintet. Coming up, we have plenty more, of course, on markets. We'll have plenty more on geopolitics. And we look ahead to the Fed next week. This is Bloomberg. Well, low productivity and failure to invest have led to vast amounts of lost growth in the EU. Now, with France and Germany in political crisis, the continent risks more lost years of stagnation, as our weekly doc explains.
The news for Europe just keeps getting worse.
The French government collapses, plunging EU's second largest economy into turmoil.
France's political upheaval in December offered another glimpse at fractious European affairs.
Germany's under pressure, and Volkswagen workers are striking hard.
In my view, we are already in a crisis mood.
Our former model is over. If we follow our classical agenda, we will be out of the market, I have no doubt.
The EU's economy is now fighting for survival and struggling to keep pace with the US and China.
Had the European economy grown as fast as the American economy over the past couple of decades, we'd be generating 3 trillion euros of extra income every year.
That's roughly the equivalent to the total GDP of France being routinely added into the economy.
Europe needs to have a digital era economy with companies that challenge those from China and from the US.
Without that, the region's at risk of being unable to afford to protect itself in a world where security is no longer guaranteed.
It's just a very tense moment for the world, and Europe's at the center of it.
And you can watch this week's documentary from Bloomberg Originals in full on YouTube and on our website. Now, the picture is looking very interesting in terms of what we're looking out for. In the U.S., U.S. futures seeing a little bit of a lift. Tech stocks probably leading a lot of these futures at the open. And then we look ahead to some of the other figures, data for the final Federal Reserve interest rate decision of the year. That's next week. Coming up, a second martial law impeachment vote looms for South Korean president. We're live in Seoul, where protesters have gathered again. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. China's key economic conference disappoint investors. Beijing signals more borrowing and spending, but leaves out policy details. French President Emmanuel Macron is set to name a new prime minister in the coming hours as he looks to avoid another government collapse. Plus, Britain's economy unexpectedly shrinks for a second straight month in October, extending a disappointing run of growth figures under the new government. So the South Korean president, Yoon is set to face a second impeachment vote on Saturday after his declaration of martial law last week. Now, his approval rate has now slumped to its lowest level, just 11% since he took office. Bloomberg Sherry joins us live from Seoul. Sherry, thank you so much for joining us. I know you're in the middle of Seoul. There's many, many protesters around you. What's the latest on the political standoff in South Korea?
Francine, so far it feels almost like business as usual. I'm in Gwamun in Seoul, and you can see that behind me there are some holiday decorations. Further behind me there's actually a holiday market where people are going to enjoy the sights. And yet you can feel the political tension looming over the city. Just to my right, you can see police vans standing here. They'll be here all night. Earlier in the day, there were protesters on the other side of the road, and those are President Yoon's supporters. They're against impeachment. I talked to the organizer of those protests who said they'll be back again tomorrow to demand that President Yoon stay in office. They think that the opposition was the one that first created the crisis. Of course, as you said, his approval rating has fallen to a record low. In fact, Gallup Korea now saying that 3/4 of respondents want him to actually be impeached. And in the impeachment vote tomorrow, that could potentially happen. More ruling lawmakers are now hinting that they will vote for impeachment. If that impeachment bill goes through, then that goes to the Constitutional Court, and we could see a few months later also an election being held.
So how is the government running right now, Sherry-Ann?
Authorities have been out in force in the last few days. We have heard from ministers and also finance officials. Today, I spoke to the government spokesperson and culture minister, Yoon, who was reassuring the public, reassuring foreign visitors, also that he was talking to foreign government officials that everything is fine, stable, and secure to visit South Korea, although he did say that he was shocked at the declaration of martial law, not to mention that, of course, he wanted to see some stability in the country, although he was encouraged by the strength of democracy. We also heard from the finance minister, who is saying that they will do whatever they can to support the economy. He already talked to major credit ratings agencies, not to mention foreign companies today, to assure them that institutions are running normally right now.
Sherry-Ann, thank you so much. We'll, of course, go to Sherry-Ann throughout the day and the evening to see exactly what's going on in Seoul. Now, Broadcom shares rallying in U.S. pre-market after predicting a boom in demand for its artificial intelligence chips. Now, the company, a chip supplier for Apple, says sales of AI products will gain 65% in the first fiscal quarter. You can see Broadcom pre-market gaining some 14.5%. So let's bring in Jimmy Muchechetere, the senior equity analyst at Investec. Jimmy, so good to speak to you. I mean, look, you're a medical doctor, so I'm going to speak to you about healthcare, but you also look at AI, at crypto. And Broadcom, up 15% pre-market, and this is really on everything to do with chips, on the fact that we're just expecting this AI boom to continue.
Yes, 100%. So Broadcom has done a remarkable job of segregating its business between hardware and software, and is benefiting from both sides. So as you see some of the big hyperscalers looking to create their own custom chips away from NVIDIA, that benefits Broadcom because it supplies all of them, whether it's Meta, Apple, Amazon, or Google by itself.
But Jimmy, is there an infinite demand for some of these chips in terms of higher value chain, or are we going to see the U.S. really flood with a lot of them, you know, when they catch up, and then it's a little bit like the mining sector? At some point, there's just too much of it.
I think that's right. I think we have to keep grounded and remember that the semi-cycle is a very, very cyclical sector. At some point, there will be over capacity. Yeah. The market will need time to digest, and we'll see a cycle coming out of the semiconductor market.
Jimmy, what do you spend most of your time trying to understand? I know we talk about tariffs and trades, and there's equity valuations, but is there something that the market is mismanaging? Are they pricing in too good news for the U.S. and too bad news for the rest of the world?
We spend a lot of our time looking at trends and where is the puck going to be, and we try and skate to that point in time. I mean, in the short term, I think you're right. All the momentum is with the U.S. It is hard to look past the U.S. at present. I mean, you just mentioned the UK GDP numbers, which disappointed for a second month running. I know these are monthly numbers. They're volatile, subject to revision. But it's not really a good trend. You look at Germany, France, there's no leadership in the EU, political debt crisis in France. So it just leaves the U.S. as one area right now where there is political certainty, there is the legislature is locked down. We know exactly who's in charge. We know exactly what they want to try and achieve. So that bit of certainty is what is driving the U.S. market. But,
Jimmy, I guess the concern is that is U.S. equities priced to perfection, and actually has all of the good news already been taken into account by the markets?
Yes, 100%. I think in the short term, valuation is less of a concern. Valuation is a concern in the long term. So the momentum could continue to carry us through. I think we see a Santa rally for sure, given where we are in the year, and perhaps the first few weeks of the new year. But then what happens after that depends on a lot of what the Trump administration does. We talk about the 3 S's: the scale, the scope, and the sequencing of Trump's policies. And we think that's what's going to determine what actually the market focuses on when you come to the first half of next year.
We talk a lot about, of course, decentralized finance and the fact that there's now a crypto czar in the White House.
Yes.
Is that going to lead to automatic higher Bitcoin? It's at 100,000. Or are we going to take a pause as we understand exactly where it goes?
There is a case to be made for Bitcoin reaching 150,000, for Solana reaching 7,500, for Ethereum reaching 7,500, Solana reaching 750. The biggest headwind for Bitcoin was regulatory, right. And that has been taken away with the Trump presidency, with Paul Atkins being appointed in this new role of crypto czar. So that has been the biggest headwind. So if you take that away, and then you add in all the other tailwinds, for example, you've got the FIT 21 legislation, which is passed through the House, is now in the Senate, and it passed through the House with flying colors, support bipartisan. So we expect that to pass through. If that does pass through, it's going to create a very strong legal framework in terms of the guardrails, what falls under the SEC remit, what falls under CFTC remit, and that is all going to drive, that is likely to drive institutional adoption.
But Jimmy, does this help with crypto ETFs? Does it help with Bitcoin, or is it a fundamental change of the financial system?
We think it's all of those things. We think Bitcoin is the poster child. We like to think of it as like the snowplow. The snowplow that goes in front and clears the way for everything else. Yes, we're already starting to see Bitcoin ETFs flows coming in, and we think that's going to continue. If we get FIT 21 passed, that's going to be another fillip to that. We're starting to see IPOs. I think earlier this week we got Crypto Check in Japan, and we expect Avant-Garde to follow suit, Circle to follow suit, Kraken to follow suit. All those are IPOs for 2025. And once that happens, we're going to see institutional adoption. Right. Then the other thing we're seeing is a lot of investors are lobbying corporates to buy Bitcoin as part of their balance sheet. We saw Microsoft rejected that idea, but we've got Amazon shareholders saying you should spend 5% of your 85 billion in cash into Bitcoin. Yeah. So if those dominoes fall, we see a lot of other institutions follow.
Jimmy, you're a certified doctor, medical doctor, so you understand, the healthcare system. What are we seeing in the U.S.? There's concern from, many people about an anti-vaxxer that's, possibly in the White House. Does it change the dynamics for pricing? Does it change everything?
It matters a lot. It won't change everything per se, because what we do is we focus on companies that are not hampered by regulation. So if you've got good innovation, if you've got strong patents, if you've got strong cash flows, are you in a niche area, do you produce free cash flow, returns on invested capital, those kind of things. So yes, an austere regulatory environment will be a speed bump, but those kind of companies will continue to do well. I'm talking about companies such as Eli Lilly, Novo Nordisk, AstraZeneca, Boston Scientific, Intuitive Surgical. These companies will do well regardless of who is, the HHS secretary. But for the healthcare sector as a whole, yes, there is no getting away with this is not really good. We saw 70-odd Nobel laureates writing an open letter and signing it.
This was a big deal. It was a big moment in history.
Yes, 100%. And it's not just the HH secretary, RFK Jr., it's Dr. Mehmet Oz, it's the new incoming Dr. McMurray, the FDA chairman. So the only person we think is not an anti-vaxxer, anti-establishment is probably the Surgeon General, but everyone else is, going to be fighting against the healthcare sector. So we would not be overweight the sector going into 2025.
That seems fair. Jimmy, thank you so much for joining us. Please don't be a stranger. I hope this is like a regular interview. Jimmy Muchechetere, their senior equity analyst at Investec. Coming up, pro-EU protests in Georgia have entered a third week, with the ruling party set to appoint a loyalist as the country's next president this weekend. We'll have the latest next, and this is Bloomberg. Well, there are fears that the political crisis in Georgia could deepen over the weekend as the ruling party prepares to appoint a loyalist president, despite weeks of protests. Now, the country has been in upheaval since parliamentary elections in late October. The pro-EU opposition, supported by the current president, Salome Zurabishvili, accused Russia of influencing the vote. Now, we spoke to her early last week about the protesters' anger.
They don't want to have a government that they consider to have been not with the approval of the majority of the people elected, decide without mandate to cut our ties with the European Union and throw the country into the arms of Russia.
Now, for more, let's bring in Bloomberg's Greg Sullivan, who's following the situation closely for us. Greg, hello. So who is likely to be named president, and what will happen to the current president?
Well, the Georgian ruling party's nominee is a man named Mikhail Kavashvili, and he is actually a former football player who did stints with Manchester City before entering politics. As a politician, he's currently a member of the ruling party and has distinguished himself with criticism of the West throughout his tenure. Now, what's interesting here in this particular election is that he's basically vying to replace the current president, who, as we heard, is very pro-European and has encouraged the protesters. Now, on Saturday, the process will be done by an electoral college. All members of parliament are part of that, so it is very likely that he will ascend or be positioned to be inaugurated later this month.
So what are the broader implications for Georgia's path coming out of the election?
Well, here and actually for the protests that have been happening for weeks after the October parliamentary elections, the key issue is in which direction will Georgia go? Will it realize its NATO and EU ambitions, or will it move closer towards Russia? Now, the ruling party, after winning the October parliamentary elections, did suspend membership talks to the EU until 2028. That breathed new life into protesters who are very worried that Georgia is moving away from their European Union ambitions. The ruling party has blamed a lot of the violence on foreign actors and what they called their chiefs. That's a sentiment that's been echoed by Moscow, but Moscow has largely said this is an internal Georgian affair, whereas the EU and the US have been very critical as Georgia seems to pull away from their EU path.
Greg, thanks so much. Greg Sullivan with the very latest, of course, on Georgia. Now, Russia is close to an agreement with Syria's new leadership to maintain 2 vital military bases in the Middle East state. Now, sources tell us that the Russian Defense Ministry believes it has an informal understanding with the Islamist group known as HTS. Now, Western officials are said to believe that the Russian bases could act as the deterrent to extremism in Syria. Coming up, we take a closer look at the burgeoning global trade in human eggs and its dark side among some of the world's poorest people. That's next, and this is Bloomberg.
So our mandate is price stability, and we really want to have inflation in this target range for the inflation. And by lowering interest rates today, we have stabilized the inflation forecast, which also means that the probability of future cuts or cuts below zero are lower today than they were before.
You also said in your statement you changed your language, while in September you said that further rate cuts may become necessary. Now you're just saying that you'll maintain a monetary policy which is necessary to ensure inflation remains in the range of price stability. So is it correct to understand from that we will see less rate cuts in the future?
So with this rate cut that we did today, monetary conditions are appropriate again, and the next decision will take place in March. Then we will come together as a board and take a decision if we need to adjust monetary policy to maintain price stability.
That was the SNB President, Martin Schlegel. Now, Donald Trump's economic advisors have told Bloomberg they're considering doubling the U.S. state and local tax deduction known as SALT. Now, economist Stephen Moore, a member of President-elect's transition team, says the tax break could go from $10,000 to $20,000. Now, the deduction is popular in high-tax states like New York and California, but is expensive to maintain. Let's also turn to today's Big Take. It's an in-depth investigation into India's growing role in the $35 billion fertility industry. But driving that trend are impoverished women desperate to survive. Our team at Bloomberg Originals have been taking a look at the true cost of a human egg.
All my husband does is get drunk and sleep. My kids and I won't be able to eat. We've also considered killing ourselves. Sumathi took me to a clinic in Vadalur. I was too weak to donate enough blood, so I said eggs.
The Dalits are among the most marginalized groups within the Indian caste system, often deprived of quality education and jobs.
All of us women are sanitary workers. I'll get 450 rupees a day. 100 rupees go toward our food.
But these women carry something more valuable than anything among their family's modest possessions: their fertility. It's an open secret that she is the fertility agent. She's a cog in a sprawling network of agents and go-betweens across the country, profiting from the sale of human eggs. Every 15 seconds or so, human eggs are taken from a woman somewhere on the planet to satisfy the global demand for assisted reproduction. Advocates warn that India's poorest women are at the mercy of an industry that preys on the most vulnerable. For Sumati and the other women in her village, the people who make the laws feel worlds away.
Sometimes we do regret donating ovarian eggs out of haste for the sake of debt relief.
Well, that video is part of a global multimedia investigation by Bloomberg reporters into exploitation and opportunity in the human egg trade, and it's the focus of this week's Big Take. Now, the story crosses the world from India to Argentina, Greece, and Taiwan. I'm now joined by Cindy Wang, Deputy Bureau Chief in Taipei. Cindy, in what way has a human egg become a global commodity?
Hi there, it's pretty remarkable. The booming fertility industry around the world has turned human eggs into a very precious commodity traded around the world. Our investigation try to find out how egg donors are recruited into this 35 billion and growing global market of assisted reproduction. This industry would be parents, donors, agents, doctors, and fertility clinics. Many of the fertility clinics are actually backed by or controlled by Wall Street investment banks or the private equities because they see this as a lucrative business. And the demand for human eggs are expected to only go up because more and more women are trying to have babies when they are older. And as women age, the number and quality of their eggs would decline. So that means the demand for fertility treatments and human eggs would be increasing sharply. And so our investigation piece reveals that the human egg trade operates in an open, gray, and black markets globally. And it's virtually in around regulated and unmonitored marketplace. Because usually when rules and conditions change in one country, the industry will shift to another. For example, in China, when parents are allowed to have more than one child, but they are forbidden to buy other women's eggs, these parents would normally look elsewhere for help. So usually they would go to U.S. to seek fertility treatments or try to buy donors' eggs. So these human egg trade really thrives globally in open, gray, and black markets.
Cindy, I mean, this was a massive investigation, a real team effort across the world. What other abuses have cropped up?
Yes, in this investigation piece, we followed and interviewed several egg donors around the world. In India, we talked to a girl who, when her eggs were harvested at a fertility clinic in India, her ID shows she was only 13. She was lured into selling her eggs for under $200 because all she wanted to buy is just a mobile phone. In Greece, we talked to a mother who was informed by police that when she was an IVF patient, half of her eggs were actually stolen and used to help other women to have babies. And it turns out that she's not alone. The Greek police had detected as many as 75 cases of alleged theft of eggs taken from the IVF patients at the clinic without the patient's consent. And in China, our donors told us that even though this country bans from buying other women's eggs, the donors would actually be driven in a van with darkened windows to an unknown lab outside of big cities, where the lab would look like just normal residents, but inside there are equipment and well-trained doctors to help with egg retrieval surgeries. So there are abuses everywhere.
Thank you so much. What an incredible piece of journalism, Cindy Wang. You can read today's Big Take on the terminal at NI Big Take Go on the latest edition of the Business Week magazine. This is Bloomberg.